Okay, in this session we're going to look at the current liabilities section of the balance sheet. And if we have a look here at the What's Fair client, we're really talking about everything in this section here. We do have long-term liabilities in some clients, things like mortgages and long-term loans, but for all intents and purposes, most clients are going to have stuff, or everyone's going to have something in the current liabilities section. So the first thing, of course, we want to do is go to our schedule here, and we're looking really, it's quite a big section actually. It's the N and O section. We're going to whiz through N and spend most of our time on O. The N work paper is our creditors or accounts payable work paper, and just like with accounts receivable, the first port of call is going to be the subledger from our accounting system, whether it be Xero or MYOB. Now in this particular case, you will see here that accounts payable has Xero as the balance. Last year they had $690. This year there's nothing payable, at least in the ledger so far. If they did have something, we would start with that and then would work out from that point. Because there's nothing in the accounts payable ledger itself, we're going to go to our client checklist and double check to see what they've given us. In this case, they've told us that there is nothing payable at all in their schedule, and we have also so what we can do now is we can actually sign off that we've done the AP account reconciliation. Also, let me just say, if we are working from MYOB, it is important to make sure that the amount from the AP ledger ties in with what's on the general ledger, because they can be different. And if you ever find something that is out of balance, you need to let me know. With Xero, not possible for it to be out of balance, so you can generally start with the Xero AP ledger as the starting point. However, we also always want to make sure that is complete, even if the client says it is complete. It's not always the case. So what I want to do right now is just spend 1 minute looking at how you might search for payments after year end for possible accruals, and this works for both accounts payable and accounts receivable. So I'm going to put this on pause for a quick second while we bring up a ledger in Xero. I've just opened up here the Xero ledger for Copy Express, just to give you an example here, and the best way for us to actually look to see if the client's picked up everything is to run a report called Detailed Account Transactions. Now this is a great report because it gives us a list of accounts by account code, by its coding type, but we can actually sort it by a particular range. So in this case, I usually use 2 months after balance date, so 1st of April to 31st of May, and we can either sort by account code or reference or date. Actually, date's quite useful, so let's do sort by date. And quite often with this report, you're going to have to go to wide view so you can see all the detail here. But what this basically does is this shows you all the ins and outs that have been coded to various accounts in the date range that you've selected. And it's often quite useful to tell it that you actually want, say, 100 items per page, otherwise you're going through way too many pages. And basically what this does is this, if I sort it by date, for example, it'll go through and show you all the things that happened in a particular date sequence. I'm actually going to go back to account code. I just think it's easier to work on that basis. Okay, so by account code it's going to put sales first, and here we can see in this 2-month period all the stuff that came in and was coded by account code. Now if we're looking at sales, we're obviously searching for possible debtors, and what we're looking for here is anything that's been received that may well have been intended to be for the previous month. Now if you know that the client, like Copy Express, does all their invoicing based in Xero, you probably can skip much of this because you know it's not really going to be a case of them having stuff that they hadn't invoiced. It's either a cash sale or it's on account, and all the on account stuff here we know goes straight through Xero, and so anything being deposited shortly after year end, it's possible that it could be cash held and deposited later. So for example here, 5th of April cash sales, pretty good chance there's a portion of that that would have been received prior to year end, so it's always good to ask the client about cash held, which is part of our normal checklist. Apart from that, let's skip through sales and we'll go to the next sections after that. If a client does not use zero invoicing, say they're a cash book client, then it's always good to look at money that comes in close to the 20th of the month, because that could well be accounts that are owing at the 31st of the month. In fact, anything up to the 20th is generally a good bet that it could relate to the previous month. And if the client has said that they don't have any debtors, but you look at this and you go, well, it sort of looks like these guys might be paying stuff, for the previous period, then you could always export this to Excel and send it to the client. Maybe highlight the rows that you want to question. In fact, quite often what I'll do is I'll just export this straight to Excel, and I'll send it to the client and I'll say, here are all the transactions in the 2 months of the new year. Please highlight anything that relates to the previous period. Okay, so we're going to skip through all of this stuff. We'll get past the income side and we'll go straight to the expenses side, because that's what we're looking at right now. Maybe I should have gone to the other end first. Okay, so here we can see all of the expenses that have gone through this ledger in April and May. Now again, we know here with Copy Express that we're entering everything on an invoice basis, so even if we get it in April, we're entering it with a March date. So for this particular client, there's very minimal chance that we've got it wrong. But for any other client, you'd be looking at these purchases, anything from 300 onwards, and you'd be asking, is it possible that this transaction relates to the previous year? The stock was received before year end. Even if they paid for it after year end. And this is very important if it's a cash book client. So you'll be looking around here, and in particular you'll be paying attention to stuff around the 20th of April, because that's a very common payment date, 20th of the month following, for invoices. And if you see a whole bunch of stuff going out sort of 18th, 19th, 20th, 21st, then especially if they're only once a month payments, that's a really high chance that those are actually creditors that were outstanding at the end of the previous year. In this case, we're very unlikely to find this because Copy Express uses everything on an invoice basis. But the useful thing here is that you can scan through and look account by account for that, or if you use the date method, like I had originally shown, then you'd be able to group all those 20th of the month payments together and look at them all at once, or at least all the income and the expenses together. So that's how you'd find out if anything has happened after year end that might be useful for you to be able to accrue. So we can say we've reviewed it and we've found nothing. Okay, just like with accounts payable, we're looking for credits in the debtors section. Here we're also looking for debits in the creditors, and in this case we may have received a credit note and not been able to apply it. In most cases this is not going to be an issue. For small minor amounts we would just leave them in place, but again the technical rules say that we cannot offset debits against credits unless they are from the same vendor. So if a vendor ends up with $1,000 credit note, they become a debtor, they become an accounts receivable rather than an account payable. In this case, because they have no creditors, we're simply going to say, yep, we've done that, because there's nothing for us to even review in this situation. But again, good practice to look at the complete creditors list once you've compiled it, and then say, are there any debits in the account, any negative items, and consider whether or not we need to accrue those as receivables instead of payables. So here we can say no journals to enter, and we have reconciled this to the balance sheet. Just again, as with accounts receivable, accounts payable or creditors are usually recorded at their GST inclusive value. If the client is not registered for GST, then it will always be the inclusive value, because the client can't claim back the GST from the government. But we always include the GST portion for the accounts payable section.